What's up, everybody? Everybody's telling me to short gold on Sunday when I called out on the video, my previous video, that I said I would be not looking to short, I'd be looking to long gold, even though everybody was trying to short it because of the fact that you had this huge pull down right here. And let's get right into the video to explain why I was looking for longs and not looking for shorts on gold. So you had, for example, this right here. This area right here, we had a very strong area that every single time that it would try to come into this area, you would have a bullish reaction. So for me, there's an indication that bulls are buying and not really selling. So for example, when it started right here, we had the drop off. This was late Sunday, early Monday morning, depending where you are in the world. So you had a drop off right here, bullish reaction, not that strong. Remember, an inverted hammer candle is not a strong indication that bulls are in control. Okay? Just keep that in mind. Then we had another strong, this is all the 1 hour chart. This is how we trade it. We had a strong bearish reaction right here with a strong bullish reaction. This is a hammer candle. This is very strong. After we broke the lows of this and the closings of this. So this zone right here that I have is a demand zone that I have drawn out from this area right here. That is a failed push down, a complete, you can say, smart money liquidation move to hit all stops that were below this from previous months. It took them all out and just rose from there. You can see that all the way to 1960, and all of a sudden we had this area right here come, fake break, even a close. I didn't touch it because my indication is anytime that something closes below, if we don't have high volume, which we did, I would be hesitant until I get a reaction on the next hourly candle. An aggressive buy would have been a proper buy, but it would be very aggressive. It would be to buy before this candle closes. So I'm going to show you on a 5-minute. So for example, there's actually 2 trades on gold this week for me. So you had this right here. I spoke about this in one of my videos on my social media on TikTok, and you can check it. Look right here. This right here, this push down, this was a 5-minute candle. Literally pushed over 200 pips to the downside. I seen this live while it was happening. This all happened within a minute. Within a minute, yeah, it was exactly about a minute. This all happened. This push down right here. Crazy move to the downside, but look how high this volume is. On top of that, we had a reaction that started to come in that it looking like bulls are starting to pick this up. So this is what happened. We had the close right here on the hourly, and all of a sudden, now what we have is the next candle after is starting to form a no supply. You can see it right here. No supply, lower than the 2 previous volume bars, and then right after that we had confirmation right here. This is an aggressive entry, okay, on the way you can trade the VSA and price action together. This is a very aggressive entry. If I were to take this trade, which I didn't, I would put my stop loss right below this one right here. And then there would be a mental stop loss. A hard stop loss would be below the actual no supply. So what I took instead was this trade right here, because now it was coming into the close of the 1 hour candle, and this was proper because of the fact that we had attempted push downs. So you can see right here is that we had that push up, and that's it. We were off. and it started to rise. It consolidated for a little bit right here, and then right after that we had a breakout. Nice trade. I took my profits. First target was right here, so that was about 100 pip move. It was about 90s. And first target, second target was this area right here. This area right about, I think it was, if I remember correctly, it was either 41 or something in this range right here. But my issue was with is as soon as I seen this candle right here and it pushed down with high volume came in, I was like, I'm closing out my position. Just, gold is like acting very, crazy the way it's pushing down up real quickly, so I'm gonna get out. That was the trade earlier in the week. The second trade that I took was this one right here. This one was a more aggressive trade for me. Why? I called this out on Telegram, and I'll show you why it is that I was looking at this one like this. So I drew a fib from here to here, because look how much volume there is right here on the 5 minute. I drew it from there to there. For me on gold, I've back tested this. This 0.1 8 level is a little bit key for me. I'm not going to explain too much in details about how I trade it, but it is a key area for me. So you can see right here, we had this push down, push up, and then break. This is indication that bears are now, selling. And bulls are taking profits, so they're getting out of position, so you're going to start seeing heavy drops. I didn't expect this crazy of a drop, to be honest. I expected something like this: drop, up, drop, up, drop to this level. I didn't expect it to happen like this. It happened a little too much, too aggressive. So what I did was I waited, and I still didn't enter until I seen something like this form. Now, you're going to tell me this bar right here was high volume, even though what happened was is we had a bearish reaction after. A bearish reaction, these are 5 minute candles. It plays a little bit different than a 1 hour bearish reaction. My key thing was with this is this. We came to this zone right here. It didn't do my 7-1, but it came to a demand zone. This demand zone is very strong on the 5 minute. Very, very strong. You have a double bottom with both of them showing high volume at the lows. Both of them showing high volume at the lows. So you can see this right here was something that I really, really liked, and I explained a little bit in detail. I want to explain it more right here about what it is that you could have seen. As far as people say the 1 minute is just noise, it is not noise. I'm going to show you proof of why it's not noise. You had this strong volume push down, correct? We came this right here. Remember, this is that fib. This is the low of those two 5 minute candles over there, and this broke through it. Now, a lot of people had stops below this, below that area right there, if they were going long. And what it did was, it was a fake break and take out little stops with high volume, with a strong, very strong bullish reaction. This reaction from right here, 32.6, all the way to the close of this, 37, let's say, that's a 50 pip move in 2 minutes. That's a 50 pip move in 2 minutes. With all bullish reactions, this is a clear indication to me that bulls are now taking control. So this is what I did, how I entered this trade. You had, this is the candle that I'm talking about, bullish reaction. Now I wait for a 5 minute no supply. A 5 minute no supply is key to this. You can trade it like this in two ways. You can trade it off of this right here with an aggressive stop loss just below right here, or you can wait for a conservative stop loss and position to take, which would be right when it touches the 14 EMA. So it touched the 14 EMA with a no supply. So if you get a no supply on a 14 EMA, this is with a confirmation right after, I would be looking to long. I would not look to short anymore. So that's what I did. Took the position right here. Stop loss right below this. This no supply right here. And we went off. I'm not going to sit there and bowl or anything like that to people and tell them, oh, I took my profit all the way up here. Nope. This is not exactly, I tell people the truth, and I'm not going to sit there and sugarcoat anything. My first target was this right here. I took half a position out right here. My second target was this area right here. Between these and this. I closed out all positions right here. I even said it in one of my telegrams. So that was with gold, and those are a couple trades that you could have took this week. Very even conservative trades. You could have been aggressive if you wanted to. As far as gold goes, I'm going to talk about two more pairs, what it is that you could have took in the week. So JPY, we had this right here. This zone right here is a strong zone that keeps failing to attempt to break, even previously all the way back. So this is how I took this trade for a short right here. We had a strong bullish reaction on the 1 hour. Okay. Fake break above, could not close above, which is another sign of indication that bears are taking control. On top of that, you have the 1 hour candle. 5, look at it, it's at 5, and the volume is 31.41. So we go back to 5, and it's 23.09 the previous day. Go back one more day, and we can see it's only 16.07. So this is a high amount of volume for that day. With a bearish reaction, you could have took this trade exactly like this. Let me show you. So it is that we know what we're looking at. Look right here. You had the highest amount of volume on the 5-minute right here with a bearish reaction with a no supply, no demand. Sorry about that. A no demand right here on this candle. Confirmation right here. Aggressive trade to take. Proper trade with a conservative trade would have been a push down from the automatic rally below this. So you could have entered the trade right here, 142.20, and your stop loss will be above there. So that's about a 25 pip stop loss. Target first area right here. This second target would be this area right here. It never did reach that area. This would have been your second target. But of course, when you properly trade VSA, you never just sit in there blindly waiting for something to reach a certain spot. The problem was we had this. This is another clear indication for you to get out of the trade. You had high volume, higher than that, highest volume up there, and you having bullish reaction, so it's time to get out of the trade. You should have got out right here as soon as it closed above this. So that was with GBP JPY, and that happened the day before yesterday. So now let's look at one last thing, which is crypto. Let's look at BTC. And this zone right here, I've been waiting for it to come to it, and now we did. This is actually happening live for me, and I might be entering the trade pretty soon in about 9 minutes. So I didn't expect it to happen right now because it's been ranging in this zone right here. I've had this drawn out. You can see on one of my TikTok videos that I was looking for this zone. As soon as we break right here, I need confirmation. I need heavy confirmation on crypto. It's just a very risky asset to trade. So let's see what happens. But yeah, if I get a close above here with nice bullish reaction because of this high volume right here into this zone right here, I will take the trade with a stop loss right below. So let's see what happens. That's as far as Bitcoin goes. If you like this video, please share, subscribe, and subscribe so I'm going to make a video about showing exactly how it is that I can take trades while on my phone, even though a lot of people don't like to do it. I show the easy way to do it without having too much trouble and understanding the charts on your phone. So subscribe and share the video so you can see this video real quick as soon as it comes up. And peace out.